All right, everyone. Welcome to another edition of the OneDigital way of doing business. And if you've all noticed from the past, I talk about how we work in teams at OneDigital, where because none of us know everything, but together we do know everything. And we have our different specialties where if you've seen in the past, I had, Patrick on from the PEO side. I had Kelly on from the employee benefits side. On the commercial insurance side, I had Ben, one of the account managers with me. And that's just how we work at OneDigital. We work in teams. That way, we do have anything to any employer out there. So if you have any issues with coverage or things coming down the road that we're still going to talk about, we have 401k, wealth management division, we have payroll, human resource consulting division. And one of the other things though too is every once in a while we'll come across a property risk where it's very, very, very complicated, where you send that to an underwriter and the first thing is they look at it, when they look at the information, they go, "You want me to do what with this?" And then you go out to the excess surplus market, and even some of those carriers go, "You want me to do what with this?" And that's where my guest today here is David Nickelson-Rueschhoff, and he is our complex property specialist. And that's why I want to have him on board so that everyone knows, out there watching these videos, they're looking at OneDigital, that we do have the capability to insure pretty much anything. And that's why Dave here is going to talk about some of the past successes he's had and just some of the complex where you'll hear some of these stories and you go, oh wow, there's actually somebody who will insure something like that. And that's why I had him on, because these stories are good. And it's just something for you to know there is a resource that no matter what you can throw at us, most likely we're going to find a home for it. So Dave, welcome aboard. Thank you for joining us.
Absolutely, Tom. Appreciate it, and definitely looking forward to the discussion.
Sounds good. Just adjusting myself here.
You're good.
Yeah, no, because I had to outdo myself in my videos a couple months ago where I had the whole thing on my hand. I said,
Yes.
no, let's outdo myself, right? So we're going to set me up with a whole arm brace here.
Whatever works, man. As long as you're getting better, that's the main thing.
Right, right. Well, like everyone said, what happened? I go, well, I got old and I wore out. So
It
end up with,
happens to the best of us.
yeah, no, what a new shoulder and everything. So, but no. So Dave, I mean, just real quick on what you've, like basically your history. I mean, how did you get into this, number one? And then, maybe throw out a few, examples for us, what you've done and accomplished and helps.
100%. No, absolutely. So I joined OneDigital back in May of 2024. I joined from a large brokerage firm that I sat basically in a similar chair where I was working complex property deals. And when I say the word complex, that's kind of a loaded word, but a lot of what I managed in that seat was working on shared and layered programs, so multi-carrier panels for international programs, a lot of the tougher occupancy, so mining, hospitality, healthcare, manufacturing, just a bit of everything. Honestly, I had my hands involved in. So when I joined OneDigital and was presented with the opportunity, I definitely jumped on it. I mean, again, as Tom mentioned, there is a person or people in the organization that really can, manage and work through any deal that comes in the door. So, I sit in St. Louis, but I work with Tom closely and, work with basically individuals from coast to coast. So, I'm stepping in on deals in California, Utah, Florida, Chicago, obviously, also New York, and up in the Northeast as well. So, my expertise really is again property focused. So I've been in a property facing client role. That's all that I do. So I, help basically twofold. So technically, I sit on the new business team in St. Louis. So any new business opportunity that comes in the door, I typically have, kind of first look at it. So looking at the program structure, looking to determine, if the limits make sense, what the risk is, does it fit the client's or prospect's risk appetite, and really helping to see maybe some additional levers that we can pull from a premium saving standpoint or to get coverage in a better spot. I can't tell you how many times I've seen, just in my time here at OneDigital, I've come across programs where, client prospect has been working with an incumbent for years and looking at, essentially their spread of risk and the way the program is structured, and they're underinsured. They don't have adequate coverage in place. They have coverage that doesn't make sense. They have deductibles that are completely out of line with, what the market is dictating and truly what their risk appetite is. So, it really is asking the right questions, helping to better understand what the risk appetite is from the client or prospect's perspective, and then helping to kind of restructure, reformulate programs to better position individuals we work with on a go-forward basis. And I also work with renewal business. So, a lot of offices that I engage with have, very sticky renewals, coverage that's being non-renewed by a carrier because of a change of risk appetite, or potentially going from a single carrier to a multi-carrier panel. It's a bit of a mixed bag, Tom, but I tell you, it's fun. I mean, it's engaging, keeps me on my toes each day, and it really is. It really is exciting to be able to take a step back, kind of do a deeper dive, and really helping to unpack and uncover how we can get clients and prospects that we're working with better positioned for the future. And that's really been my goal since joining the organization back in 24.
It's interesting. One thing, and I've said it in other videos, that one of the OneDigital ways is sitting down with customers and prospects and understanding the full story.
100%.
What's going on? What do you want to do? What are you trying to accomplish? And where are we at now? And how are we going to get to where we want to be?
100%.
Yeah, I mean,
Go ahead, Tom.
really, it's a communication with the clients and prospects.
Yep. It is. I mean, I can't tell you how many times I've looked at a program and, kind of unpacking it and seeing deductible structures that are, 10, 15, $20,000. The client's telling me, the prospect's telling me, hey, I have risk appetite to take on more risk. My spend is getting out of control here. My existing brokers not really come to the table with any solutions. And it's sometimes as easy as, looking at changing a deductible. I mean, increasing a deductible from 10 to 100 or $250,000. If that fits within, again, the risk appetite, and it's palatable to the insured or the client prospect that we're working with, like, it makes sense. And sometimes you can save, a significant portion of spend by just doing something as simple as that.
I know I've had questions in the past where they have a $10,000 deductible and they go, oh, how much can I save by going to 25? Well, there's not a whole lot going from 10 to 25, but what you're saying, going 10 to 100, 10 to 250, especially if you're paying $100,000 for your property insurance, I mean, you're going to save a good chunk of change.
There is definitely opportunities, to get significant premium savings. I mean, not necessarily only from the all other peril deductibles position, but I mean, sometimes looking at, if you have, a spread of risk or locations in a high hazard windstorm area, let's say, Florida, high hazard quake zone, California, looking to pull some of those triggers as well, right? Increasing deductibles from a wind hail perspective. I mean, there's so many different levelers that can be pulled with respect to, kind of finding creative solutions. Like, you hit the nail on the head, Tom. It really boils back to listening to the clients and prospects that we're working with. I think that is so underrated, unfortunately, in the world today, not only from the broker insured prospect perspective, but I just think in the broader sense as well. It really boils back to listening. And if you hear what those individuals are saying that you're working with, you can go to the drawing board and come up with solutions that make sense to address the items. And again, whether their goal is saving premium or to get coverage better positioned for the future, the paths are limitless when you ultimately listen and kind of figure out a plan going forward.
And so with that, what is, maybe give us like one, without using names, of course, but a good
Sure.
example, a really hairy risk that came across and everybody said no, but you looked at it and found out something. amount of
Yeah,
solution to
absolutely. Absolutely.
it.
So I'll take an example. We were presented with an RFP for a prospect that was looking for a new broker partner. They were not happy with their broker. At the time, this was the end of 24. A global client, they had a large presence, I think in a total of 13 or 14 different countries globally. They, were essentially looking for creative solutions that we could come to the table with. And honestly, when I first reviewed the program, they were only purchasing a relatively small limit. So I believe the program limit was about $100 million. But I looked at this and was kind of doing, kind of a review of things. And I noticed the program was broken up into a quota share. So essentially there was 4 different carriers that were providing the $100 million limit, each of them taking 25% of that program. And, at first blush, I said, that doesn't make sense to me. This isn't a really hairy risk. I mean, it's a manufacturing risk. There's a lot of carriers out there that like to play in that space. They were taking on a healthy deductible, but, I was looking at it and it was all placed in the E&S market. And I said, there has to be a better solution here. So, ultimately we progressed through the RFP. The prospect ended up deciding to award us the business, and we immediately got to work because we had a very short fuse between the time we won the business and between the renewal date. So I initially, got everything in hand, got the updated values. We did a comprehensive marketing effort, and I was able to secure several options. One of them being with a carrier who was able to provide $100 million limit, single carrier, and take it out of the E&S space. So we were able to not only save the client from the excess and surplus lines tax implication that comes along with placing business in the wholesale channel, but also I was able to get the client better terms and conditions, better deductible structure, and I was able to save the client about 25% of what their total cost was on the program. So in the end of the day, it's really taking a holistic view, right? Taking a view of what the entire program looks like. Does it make sense at its very base, structurally, how it's structured? And then, going to the drawing board, engaging with the markets that we have great relationships with, having great discussions, painting a good picture of what the client does. And, end of the day, we were able to seal the deal, get the client a great program, and position them in a much better spot than they were under that very clunky and piecemealed approach. And, we were able to, start a great relationship. And we had the second renewal late last year, and it ended up being a great renewal. So I look at that as a win all around.
Yeah. Yeah. To be able to find, and just real quick explain the excess surplus market
Absolutely.
and the surcharges within there and the additional taxes, the additional fees, just that alone, like you said, saving 25%, better coverage, lower deductibles, and saving 25%. I mean, overall, that's a win-win.
And the 25% was just the base premium, right? So if you look at exactly what you mentioned, all of the taxes, the individual fees, they had a policy servicing fee, a cat modeling fee, bells and whistle fees that were added into this. That was an additional $45,000 that the client was paying. So I was not only able to save them on their base premium, but also completely remove the additional fee component that was, built into that. So, it ended up being north of that if you really look at the whole picture.
Yeah, and real quick, because I know I'll get when you're out talking to clients or prospects and you start talking about the excess surplus market, you want to just touch real quick because I know a lot of people don't know what that is, what market that is. You want to just touch on it real quick? What is the excess surplus
Absolutely.
market?
Absolutely. So kind of in the States, there's kind of 2 channels. We have a direct market. So we go to an AIG, a Zurich, a Travelers direct, where we approach the underwriter directly. And they underwrite the risk, they review the risk, they price up the risk, they send you back a quote. There's another model, which is exactly what I mentioned, the E&S or excess and surplus line market. And there is a certain subset of carriers that basically utilize wholesalers. So your Amwins, your RT Specialty, your CRCs, Burns and Wilcox. Those wholesalers, basically, we would approach the wholesalers, and then they would essentially approach markets that they have a contract with to work directly. So essentially, they're essentially the middleman that work directly with the carrier, with the carriers that are essentially in that wholesale bucket. So we don't directly work with them. The positive side about the E&S market is, when you have a risk that is a tougher class of business, maybe it's a client who is a manufacturing client and they deal with plastics and foams, obviously a tougher class of business. Maybe they're heavy from a loss perspective. They've had a lot of losses where it would be difficult or more difficult and more challenging to find the capacity in the admitted market. The wholesale market is great because you have a lot of carriers that are chomping at the bit, really willing and able to put up capacity, albeit at a higher price, and then you have the tax implication, on top of that. So it's essentially just another channel, to get carriers to the table, and it's great on, again, a shared and layered program where you have multiple carriers that you're utilizing to build up capacity to get to an ultimate policy limit. Typically not a single carrier play in the E&S space, but there are a handful of carriers that are willing to put up smaller capacity in the E&S space. But again, you do have that implication for the taxes in that space as well.
Right. When you say layered program, just real quick explanation on a layered, like, what is a layered program?
So let's say the client that I mentioned, $100 million. So you're buying $100 million policy limit. If you have a single carrier, you have, again, a Travelers, an AIG, a Zurich, or any other number of admitted markets that would essentially put up the entire program ground up. So you have one carrier that's providing that full policy limit. When you break it into a shared and layered, that's essentially two prongs. So a quota share on the prospect that turned into a client mentioned that they had four carriers, right? So it was a $100 million program, four carriers. So each carrier was taking 25% of that 100 million. So they were essentially providing $250 million of capacity, or excuse me, $25 million of capacity each to get to the $100 million program limit. When you talk about layering, that builds in an additional complexity because you're not talking about a straight quota share across the board where it could be four different carriers. But let's say for that same example, let's say the client is purchasing 200 million. So maybe in addition to that four carrier panel in the primary 100, you need to build an additional $100 million of limit. And that 100 million, you would have to break out into, let's say, 150 and then a 200. So breaking it into chunks where you have carriers that come into play on those various layers. So think of it, the best way I can describe kind of a shared and layered program is like a puzzle. When you put pieces of a puzzle together, it comes together and it looks like what the puzzle is supposed to look like when you get all the pieces put together. But until that point, it's kind of clunky and it's piecemeal. So, it's essentially finding the capacity that carriers are willing to deploy, putting it in the puzzle, and essentially building out the structure to whatever program limit you're looking to get on board.
That's interesting because like I said, when you use terms like this, the standard business owners, they don't, you have your BOP policy, you have your $5 million building, you don't really need to worry about any of what we're talking about. But like you said, you get into some of those situations that, insurance carriers look and they go, what do you want me to do with that? Right?
Correct. And, here's another example. And I mean, this is another client that I worked with earlier last year. And it was, they were purchasing $10 million. So it was a relatively small limit, but it was a food manufacturing client. And that is a tough class of business. You don't have a lot of carriers that are really excited about, that type of occupancy. So we had to essentially build a quota share program where, even though it's a relatively small limit, that they were buying. They were not buying 150, 200, $250 million limit. They were looking at a $10 million limit. But to get the capacity in the door, we could not find a single carrier that was willing to put up that. So we had to chunk it out into respective pieces to essentially build that program to the $10 million limit. I mean, it's all about being adaptable and working with the markets to figure out what type of capacity is available, and ultimately what do we need to do to get that capacity in the door at the best price and terms and conditions.
And then, I often have, some customers, prospects, they'll say, hey, when you have, like, how do you, like, what kind of tools do you guys have? Meaning us at OneDigital, what do you have to, whether it's CAT modeling, valuing business or buildings and all that, like, they're like, what kind of tools do you guys have? So,
Absolutely. Well, we have, I would say, from the property standpoint, a comprehensive tools that we have available. You mentioned CAT modeling. So back in July of 24, we engaged with Moody's, which is pretty much a name staple in the property analytics department. They obviously, have a lot of other resources. You think about, Moody's rating, where they do rating for businesses and the casualty piece, but, one small piece is risk modeling. So we are able to essentially take a client's statement of values, a current policy that they have, and run it through risk modeling to determine what the probabilistic modeling output says with respect to cat perils. So named windstorm, severe convective storm. Severe convective storm, think of it as your wind, hail, tornado events, flooding, winter storm, wildfire. We're able to see what the data shows with respects to the client statement of values, which help us to understand, is the client purchasing or is the prospect purchasing the right limits? Are they underinsured or are they overinsured? And that allows us to really do a deeper dive to help set limits on programs that we're marketing, right? We get a prospect in the door. We determine, well, the modeling output says you should be purchasing $10 million of flood and you're purchasing 50 million. Well, that 40 million delta could be a pretty significant savings, right? Again, based on risk appetite and what their individual tolerances for risk taking, but there's opportunities there. We also engaged or will be engaging later this year with Eigen Risk, another leading program software company from a property modeling standpoint. Helps us to really put things in perspective to identify concentration of values, looking at specific values and where they're located in a client's portfolio, and overlaying where a tornado event or a hurricane event historically came, and what would potentially have been lost in that event on the client's portfolio. So, it's a lot of hands-on tools that really allow us to be able to better speak to prospects and clients that we're working with, to be able to help guide and inform them on, best paths to move forward. Because ultimately, the decision resides with the client. How much limit do they want? We essentially serve as consultants in that equation, but we have tools and resources at our disposal that we're using every day to basically help to best guide those individuals that we're working with so they can make the best informed decision and business decision in the end of the day.
That's awesome. Like I said, just the way, going back to when we first became a OneDigital company, I mean, this is the stuff that we have, the resources, the people, the teams. That was the biggest reason. Being able to go out to a customer or prospect now, no matter what industry they're in, no matter what they do, no matter what their problems are, that we most likely, I mean, I'd say 99.9% of the time we have a solution.
Absolutely.
And
Yep.
those solutions, I mean, they all come about is when you're out talking to, it's getting to know, like I said, like we talked about in the beginning, you get to know your prospects, get to know your customers inside and out. What's the goal? What are they trying to accomplish? Where are they at now? And just basically putting together a program that makes sense for them. And the other thing is, I mean, it has to be affordable too, right? You know,
Yes, it
yeah,
does.
I mean that's the biggest thing. I mean, property, what do you see right now in the property market? What are you seeing in the property pricing, premiums? Because I know for the last few years that was a real sticking point in the property market. But recently I've seen some easing on it. Have you seen that across the board?
I have. Yeah, I was knee deep in the thick of the super hardened market where you were seeing, and I was having to deliver proposals and ultimately quotes to clients, 40, 50, 60, 70, 80% rate increases year over year. That is not an easy message to deliver. But a lot of that is, where we were a couple of years ago. I mean, the property market and the insurance market in general ebbs and flows, right? Right now, Tom, exactly to your point, we're in an improved market. I don't necessarily go to the degree of saying we're in a soft market, but I would say we are in a much improved market from where we were, I would say 12 to 18 months ago. We're seeing I would say the relatively benign hurricane season, both in 24 and 25, have led to some easing of the property market. You're seeing secondary perils. When I say secondary perils, I'm talking about the hail events. I'm seeing the tornado events, the wildfire events. Those events are still driving. I mean, you're talking about hundreds of billions of dollars of those type of losses every year that we're seeing. I don't see that trend necessarily easing at all. But on the flip side, we are in an improved market. We are seeing carriers that are now much more willing and excited to deploy capacity, even in occupancies that they weren't willing to play in the past. You're actually seeing, and that one client that I mentioned with the carrier that I placed at the significant savings, I saw an 8% rate decrease from where they were in 24. And this was again at the end of last year. So, you're seeing much more palatable increases on those tougher occupancies. And even you're seeing rate decreases. Obviously, if history says anything and it will show its face, the tide will turn at some point. But we're in much more of a buyer's market today than we were again 12, 18 months ago.
And it's not the crazy soft market like you talked about where
No,
25, 50% reductions.
no. I mean, I'm
Yeah.
saying, I'm thinking, some I would say on the very high end for very, very clean accounts from a loss perspective, you're seeing, 15%. And that's best case scenario. I would say much more the single digit rate decreases year over year. And those tougher occupancies, if it's a cat heavy prone area, let's say again, all Florida based exposure, you're seeing, much more in the low to mid single digit increases. Again, if it's loss heavy, that 10% rate increase, but it's a bit across the board, just depending again upon what the occupancy is, what the losses are, and what the geographical spread of risk is. So I mean, it does vary from client to client, but again, a much more improved market where we were not very long ago.
I was saying probably a year ago,
Yeah.
right?
Yeah,
Just a
I mean,
year
and
ago,
that's how quickly the market can change. I mean,
right?
it's crazy to think that, a year, 12, 18 months ago, we as brokers were delivering very, very difficult news to clients that we work with. And now the things have shifted and we're delivering great news. We're delivering news that, you're looking at a very low increase or even a rate decrease year over year. We definitely take advantage of when the market, favors us, right?
Right. One quick question. Have you ever come across a risk where you saw it initially and said, "Oh, I don't even know if I can do anything with this," but then you end up winning? Was there one that was just so far out there that you like you say, your first initial reaction too was like, "I don't even know if I can do this," right? You ever have one of those?
I'm actually working on one right now. It's a very, very difficult occupancy, more along the lines of the entertainment sector. Personally, I have not worked in that space in the past. when it first came across my desk, I was like, wow. And looking at the rate that they had on the existing program, it was a dirt cheap rate. That carrier was looking to non-renew because I think they ultimately determined that they were not priced where they needed to be, and came to the table and said, we are not. This is basically outside of our appetite. So, first blush, yeah, I would say that it caught me a bit off guard. But again, it's level setting with the client. This was a client who was acquiring something that was completely outside of their portfolio of businesses that they operate in. So this is very new to them, and it was new to me. But first blush, I said, we will do our best to get options on the table as competitively priced as we can with the best terms and conditions. Going to the drawing board, running those analysis that I spoke of before, doing the risk modeling, running the analysis through cat events and historic events to see what the probability of loss would be. Going to the drawing board and looking at their statement of values, do these values make sense from a cost per square foot? Is this going to pass muster with the markets that I approach? It's sometimes doing that very, very basic work of just ensuring you have everything in line. Because from the broker perspective, we're representing clients and prospects that we work with. We need to make sure we're telling the best story possible to those markets so they're interested in providing terms. And I'll tell you, just earlier today, actually, I received a quote, and it was more expensive than the program that they were at with the previous owner, but it was much better than I anticipated from a rate perspective. And terms and conditions, deductible, much better than where I expected it to come in. So, the market, again, does surprise you sometimes. Again, it's all about telling the best story, all about presenting the client story as best as possible, helping the markets understand what clients and prospects are doing proactively to mitigate risk and prevent that catastrophic loss from happening. And sometimes you get news that you least expect. And I set the stage with this client very early on in discussions and said, you're going to be looking at, a very, very healthy increase in your overall spend, which they completely understood. And then having to deliver a message earlier today that it came in much less than where expected, that's a great message to have to deliver.
Right. And that goes back to the capacity, us at OneDigital. Well, we had our capacity when all these different agencies were bringing together all the different resources on the commercial insurance side. I mean, what do we represent now? 400 and 500 carriers, something like that?
Oh, absolutely. It is so expansive from a carrier perspective. And you're talking about carriers from, those small carriers that are writing the business owner, small business owner package policies to national carriers that are writing program limits in the 250 to $500 million program limit, range. So the pool of carriers that we have access to, it's great because you see the risk, you see what you're working on, the pool that you need to approach, you market the program, and essentially you see what the market comes back with as far as options available. And the more options, the better. As I mentioned just a few minutes ago, the buyer's market right now, having 3 or 4, 5 different options to present to a client or prospect that you're working with and being able to really do a deep dive and digest and review with them, like pros and cons of each of those programs versus being pigeonholed and saying you have to take this option because it's the only one on the table. It's a great place to be. But I mean, even in that scenario, Tom, we fight tooth and nail to get things as good as possible, from an overall structure standpoint.
And it's like I said, just the available resources and all that to be able to go out and tell someone, look, I most likely have something for you. I get this question. Someone goes, how about a fireworks manufacturer? We have something for that one?
I have a solution for pretty much anything you bring to the table. Even if I've not personally seen it, which I have not personally seen a fireworks manufacturer, but off the top of my head, there are several programs that I would think would be a good fit for them. Now, again, a fireworks manufacturer, the overall cost on that's going to be, a bit more aggressive than very clean, office building, right? That's literally covering desks and computer equipment, right? So you have to take that into account. But There is there is a home for every type of risk. There is. It's a matter of having a broker partner that has the relationships built with those carriers, with the wholesalers, with everyone that we work with to be able to get to that endpoint, right? That's really the name of the game. If you don't have the relationships built, then you're shooting, you're throwing a dart at a dartboard blindfolded and hoping that you land, on the bullseye. So that's really the difference. I think we're really what differentiates us as OneDigital and what we can bring to the table versus some of our competitors.
Right. So to wrap it up, what would you say? Let's say someone presents you with, hey, I have this risk. Just to wrap it up, like, what would you do? You automatically go in going, we can do it, we got it, and then we're going to figure it out. Like I said, you're going to sit down, you're going to meet with the prospect, learn everything about it. But is there anything that you would ever like initially say no to, or are we just like, hey, we most likely can do it?
I never say no out of the gate. I think every client and prospect presents a unique opportunity to really understand, what they're unhappy with, right? If I'm presented with an opportunity, it could be something as simple as, the prospect is not happy with the service that they're receiving from their existing broker. They're not happy with the turnaround time on issuing certificates of insurance. That's a relatively easy fix. It could be something more complex where they don't like that they've been stuck with a carrier for the last 5 years and are getting hammered with 20-25% rate increases year over year, have a good geographical spread of risk and a clean loss history. It could be exactly what you mentioned, a fireworks manufacturer, obviously very difficult class of business to work with, but there is never something that I would say no to out of the gate. My ask is I want to understand what the client's goals are or what the prospect's goals are. What ultimately do they hope to achieve, right? With their insurance program from a property perspective. And allow me the opportunity to do a comprehensive review of the existing program. Let me look at the program. Let me look at your statement of values. Let me run some analytics to determine if things make sense, how they're currently structured, or if there are opportunities to get some improvement. In the end of the day, simply going back to the drawing board, creatively looking at limits and pulling those various levers, looking at the sublimits on a program, right? Some of those throw-ins that carriers put into a policy, attraction property, electronic data equipment, civil or military authority. Those are typically included on property programs. But going back to the drawing board and saying, hey, I think there's an opportunity to get this limit increase from, let's say, 1 million to potentially 2.5 million, or 100,000 to 250,000. My focus has always been and will always be, if you don't ask the question, you're never going to know the answer. So having a discussion with the markets and determining if there's an opportunity to get things in a better position, marketing a submission with the asks of what I hope to see, seeing where things land, and just having that open dialogue, not only with the markets, but also with prospects that we're working with clients that we're working with. In short, Tom, that's kind of a long-winded answer, but yeah, I would never say no to something. There's always an opportunity and an option on the table. It's just really determining, what we can do to get to that point, if that makes sense.
No, it makes total sense. I had someone asked the other day about contingent business income. So maybe
Mhm.
since we're on here and you're on the property side, can you explain contingent business income when you're talking about vendors, suppliers, and then also, what are the triggers of coverage? Because they also asked, they said, is there an endorsement or anything you can put on the policy for absenteeism? So let's say, like, you have your supplier, they're down in your supply, like they can't get the product or the raw material to you because they're experiencing, I mean, of course, contingent business income, I'm going to let you talk about that, but also it was a very good question. So if a supplier has issues with absenteeism with the employees and it goes down, is there a way to cover that as well? I mean, I said, you know what? I'm going to be on a Zoom with our property expert, so I'm going to have him answer some of those questions.
Yeah. So, I would say with respects to what you typically see in a property policy, that would not be covered, right? Because you're looking from a contingent business income perspective, you're looking at a loss, a covered cause of loss at a third party provider that basically impacts your business. So think of you're in a manufacturing business and you're purchasing widgets from a supplier overseas. Let's say a fire happens at that facility and their production of the widgets stop. You therefore can't get the widgets and you're basically at a standstill because you need those widgets. They're critical to the production that you do at your facility, right? Your business is going to suffer a business income loss, even though you did not have a direct loss at your facility. So it's essentially at the other facilities. Typically, property programs build in coverage for that up to a specified limit, and that limit varies depending upon what type of program you have, how much, what the overall policy limit that you purchase is. So I mean that is very, very broad and expansive, and could be very, very low to very, very high. I would say if you are in the business that work with third-party vendors that supply your business with critical parts or components, that is something you need to look at, because there is a high risk for potential loss. And again, it's not loss at your facility, but it's loss with one of your vendors. I'd say with respects to absenteeism, that's a great question. Never been asked that before. Again, typically in a policy, that would not be a covered cause of loss. Now, with the exception, every property market does have the ability to manuscript, right, coverage onto a policy. I would be very hard pressed to believe that there would be a market that would be willing to do that. But again, here's the thought. If this is something that you're having a discussion with the client, having a discussion with the prospect, and they bring this up, if you don't ask, you're not going to know the answer. So let's ask the question. Let's have a dialogue to see if this is something that could be built in to the policy. And maybe it's for, a much lower limit than what this contingent business income limit is. But, having that assurance that, we as your trusted partner and broker and advisor and consultant are doing to position you in the best way possible for those worst case scenarios, right? I mean, it's all about having discussions. And again, just shooting that down off the bat, again, while I'd be hard pressed to think there would be someone that would be willing to do that, let's have a discussion and just see kind of where things land.
The bottom line is never say never until every insurance company tells you no.
Correct. And, again, as, working with those that we work with, we are being relied on as the expert, right? So the clients that we're working with, the prospects that we're working with, they're coming to us, asking us for our input and expertise in how to address these critical items. A critical item is going to be very different for one client versus another client. It's going to be very different. But hearing what those concerns are and looking at alternative solutions, whether it's having a carrier endorse on something manuscript in the policy, or whether it's looking to our London partners that we work with, they may have a solution on the table that is so far-fetched and so out of the box that may be very well available. I mean, one thing as a quick side note, like, data centers, they're becoming the talk of the town. I mean, where I live specifically in St. Louis, our city council passed an ordinance that is allowing a data center to be built just a couple of miles from my house. I know it's been a point of contention, but you think about that from an insurance perspective and all of the things that need to be contemplated with respects to placing insurance. I mean, we have insurance carriers out there right now, parametric markets, which I don't necessarily want to go down the rabbit hole of fully explaining what that is, but they're a very different insurance product. They are trigger based. They have built a specific product for data centers that literally just rolled out a couple of weeks ago. And as things change, as as things evolve, as not only markets, the evolving risks are always going to be present, but as that tide continues to turn, we're going to see carriers that are going to come to the table and continue to come to the table with creative solutions. So it's all about trying to stay one step ahead of the curve with respects to that, and knowing where to approach and who to approach in the event you get asked a question or have something that you're trying to find a solution on.
And property is a big topic. I mean, it's
It
a very
is.
big topic on with not just, the retail shop down the road. I mean, you go from the retail shop to, like you're talking about the manufacturer with 12, whatever, 14 countries,
Yep.
or you're talking about someone in a flood zone and they're trying to figure out how to get proper coverage when you're in the flood zone because the carriers don't write you're in the flood zone. Most of the standard carriers are going to exclude flood, but then you got to go to a flood program. I mean, it gets really complicated on some things.
It does. It does, and it's you peel back one layer of the onion, and there's many more layers below it. And again, that's really where I say having a trusted partner that works alongside of you, that really knows what they're doing, that really is able to uncover and unpack everything, to determine, what course of action do we need to take on a go forward basis is so very important. And I tell literally every client and prospect that I work with that very same thing, because there's a lot of brokers out there, a lot of people in this in this industry, but having someone you can rely on that it truly partners with you, it speaks volumes.
So in conclusion here, thanks for joining me.
Absolutely.
And I let you do most of the talking today, which is awesome because I've
Absolutely,
been a
Tom.
little with this whole thing, a little slow lately.
Under the weather, so to speak, right?
Yeah, I mean, it's funny and I was thinking in my head. I said, you know what, we're getting Dave on. We're going to talk about complex property situations, and it's almost like having this thing restored, right? Having your shoulder rebuilt. What was
Yep.
that? Someone said it was like, I think you even said it, the $6 million man or whatever.
The Bionic Man.
Yeah, the Bionic Man. That's what it
There you
was.
go.
The
Yes.
man, like having it
Yes.
rebuilt. It's like, can we do it? Yeah, we'll figure it out,
Yes.
right?
Exactly. Exactly.
We'll figure out how to rebuild them. But no, but thank you very much for joining me. And this is very informative, like I said, to get out, to just have people understand that here at OneDigital, I mean, I don't know of anything we can't do.
100%.
I mean, I
100%.
really don't. I really don't. And it comes down to, where you'll have some people go out and they try and pitch themselves. Hey, I know I can do everything. I can do your investments. I can do your employee benefits. I can do your 401ks. I can do your HR consulting. That's not how we do it. Like I said in the beginning, One Digital Way is individually, we don't know everything, but together we know everything.
100%. And I would echo that without question. And again, an opportunity comes in the door. Tom gets an opportunity, from a property perspective, reaches out to me. If I don't know the answer, there are other individuals in the organization that I can rely on. And having a team like we have here at OneDigital that has that support network and framework behind it, I mean, is awesome. It shows its face every single day, and we look forward to kind of what the future holds and where the path will take us for sure.